What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk a little bit about both silver and gold, but more importantly, we need to talk about the latest CPI report because inflation just got worse. We're going to get into it really quick. Just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel. Come and join us in the Precious Metals VIP Club for giveaways, live streams, deal alerts, and a whole lot more. And of course, last but not least, make sure to download Webull and fund your account. They're going to give you 2 free stocks just for doing so. And today is your last day to refer 3 friends to get at least $150 worth of Amazon stock for free, with the chance of getting all the way up to $3,000 worth of Amazon stock. Everything is linked in the description. So today is Thursday, February 10th, 2022. The current spot price of silver, as I'm filming the video, is $23.41. It's up 13 cents or up 0.56%. Spot price of gold is $18.3210. It's down $1.10 or down 0.06%. And of course, the gold to silver ratio is in the 78-to-1 range. But again, that's as I'm filming the video, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. Okay, so in today's video, we are going to be talking a little bit about silver, a little bit about gold. Sitting here in front of me, got a little bit of each. But before we can even get into the money, I think we need to first talk about the currency and the general state of the economy, more specifically, the latest inflation report for January 2022, which just came out this morning. Okay, so for those of you that didn't know or didn't see, this morning the CPI data for the month of January was released, and let me tell you, it's not looking good, like at all. As a refresher, let me do a quick rundown of what's gone on this entire year so far. In early January, we got the December inflation report, and we learned that inflation rose to over 7%, which is the highest in 40 years. We also got December's jobs report, which was expected to hit over 400,000 jobs. We fell short by a lot, with only 199,000 jobs, with worker productivity at nearly an all-time low. For the entire month of January, the stock market fell lower and lower every single day, with, I believe, only maybe 2 or 3 days actually closing in the green, the rest closed in the red. And then the Federal Reserve had their massive meeting January 25th and 26th to discuss the tapering and rate hikes game plan to reduce bond buying until March and then begin raising rates, which we learned they intend to stick to, but they're willing to take emergency action if necessary. And then finally, Jerome Powell came out to speak and answer some questions. He said that the plan shouldn't have a negative impact on the workforce, considering how many job openings there are, which the market did not appreciate because that meant he acknowledged that there's an unemployment crisis. He then went on to prepare everyone for the next inflation report, which is the one we got this morning, which we're about to get into, by saying that January's inflation might look like December's inflation, possibly worse. The market really didn't appreciate that. Which now finally brings us to what was released today. The January 2022 inflation report. According to the Bureau of Labor Statistics, the CPI data shows that inflation is no longer at 7% like it was last month, but it's now 7.5%, the highest inflation since 1982. We were expecting a month-over-month inflation rate of 0.4%. It ended up being 0.6%. Year over year, we were expecting 7.2%, and obviously, as we now know, it's 7.5%. Something that a lot of people are pointing out is that the price of food at home has gone up by 7.4%, while food away from home has gone up only 6.4%. However, it's important to remember that we've been getting a lot of updates the last couple of weeks. It's being reported and released from popular restaurants claiming that they have no choice but to start raising prices. So we can expect that 6.4% to be much higher over the next few months. Gasoline is up 40%. Electricity is up 10.7%. New vehicles are up 12.2%. Used vehicles are up 40.5%. Good God. Now, the reason there's such a big difference between new and used vehicles at the moment when it comes to price increases right now is because automakers are not only selling less vehicles, but they're making less vehicles. People right now know that now is not the time to go and buy a brand new car fresh off the lot. So the customer base has gone down, but also with the supply chain constraints, they're not even able to make as many cars even if they needed to. So right now it's kind of like a blend between supply going down and demand going down at the same time, causing inflation to not be as bad on new vehicles, but horrible on used vehicles. Now, obviously, this isn't everything. The entire report is 37 pages long, which I encourage you to, at the very least, go and skim through for yourself and familiarize yourself with some of the details. Confirm for yourself that I am not mistaken. But among all of the price increases that we are currently seeing, the only price decreases we're currently seeing are lodging away from home, down 3.9%, and wireless telephone services, down 0.1%. So in conclusion, this report isn't good at all. Inflation continues to climb, partially due to massive amounts of reckless currency printing over the last 2 years, but also because of persistent supply chain constraints. And upon the release of this data, the stock market did not like the news, especially in the pre-market. We're up a little bit since then, but the S&P 500 is currently down 0.32%. The Dow Jones is down 0.08%, and the NASDAQ is down 0.46%. Now, keep in mind, I am filming this video around 10:30 in the morning, so God only knows what the market is going to do throughout the course of the day, but I just wanted to point that out. We are pretty deep in the red right now, and we could go even lower throughout the course of today, which I'm personally probably anticipating. And by the way, really quick, speaking of the stock market, make sure you download Webull and fund your account. They will give you 2 free stocks just for doing so, and today is the last day. You only have until midnight tonight. Refer 3 friends to the app, and they're going to give you at least $150 worth of Amazon stock for free, with the chance of winning all the way up to $3,000 worth of Amazon stock. All you got to do is click that little invite button, send it to 3 people that you know. It's quite literally that simple. Webull link in the description. And now I wanted to get into the silver and the gold, but there's one last thing I wanted to say, and it's something that we need to prepare ourselves for. The Federal Reserve's game plan has been to continue tapering till the middle of March, March 16th, and at that point begin raising rates likely by 0.25%. That is more than likely going to get bumped up to 0.5%. And if you've been paying attention to my videos the last couple of days, you'll know that I just posted one video either yesterday or the day before with some rate hike expectations where I said 2 major massive catalysts, potentially the only 2 major massive catalysts, are the inflation report that we're looking at today, and also the next inflation report, which should be coming out around March 10th. The Federal Reserve has their meeting March 16th. So before that meeting, 2 more inflation reports were coming out. This was one of them. And I had said in the video where the expectations were, if the inflation continues to get worse, or at best case scenario, just remain persistent and not continue to climb and climb and climb, the Federal Reserve could take emergency action plan and potentially, worst case scenario, pull the rug out from under us and end the taper sooner than expected, or at the very least, begin raising rates in larger increments. Instead of 0.25% at a time, it's likely going to be 0.5% at a time. And that could change depending on what the next inflation report looks like. So right now, we need to stay as focused as humanly possible. We need to pay attention to everything going on. We need to monitor this very, very closely. That's what I'm going to be doing. And I always monitor it closely. But for the next couple of weeks, my eyes are going to be glued to these reports that are coming out. But now moving away from all that, I wanted to quickly talk about some silver and some gold. By looking at the spot price today, we can see that not a whole lot of movement is going on in the precious metal world. Silver's up just a little bit, gold is up just a little bit. Again, as I'm filming the video at 10:30 in the morning, God only knows what the spot price is going to be later today. You can head on down to the comments and let me know if spot price has changed by very much by the time you're viewing the video. But we currently have on screen a nice little selection, not a whole lot. We have some Queen's Beasts right here. We have the Creatures of the North right here, just hit the camera. We have some miscellaneous coins, Type 1, Type 2 Silver Eagle, Australian Kangaroo, Canadian Maple Leaf. We got some junk silver over here, some Mercury dimes, some Roosevelt dimes, some Walking Liberty half dollars, and of course we have a little bit of fractional gold up there at the top. We have a 10th ounce Krugerrand, Philharmonic, Eagle, Maple, Britannia, and then of course a 1/4 ounce Philharmonic. So I wanted to talk about this today because in yesterday's video, and I believe in the video that I posted before yesterday, I had mentioned that I view the silver and gold as a way of protecting myself from politicians and keeping myself as safe as humanly possible from the poor decision making that our politicians and the government makes. I stand by that. That's something that I've believed for the last couple of years, and that's something that I will probably believe for probably the rest of my life, if I'm going to be honest with you. I just view it as, at least in my opinion, a safer version of a savings account. See, a savings account, it's guaranteed to go down due to inflation, kind of like what we're seeing today. The purchasing power of the dollar bill just gets lower and lower and lower, gets weaker and weaker and weaker. Sure, you get that 0.000001% interest rate or whatever they're offering nowadays. Very generous of them, but it doesn't keep up with inflation. Even on a good year, where we're looking at 2.5% inflation, that's to be expected. Even that 0.0001 doesn't even scratch the surface when inflation's at 2%, 2.5%, or during times like these where we're looking at 7.5% inflation. Not good. Not a good sign. So I'm going to continue financially playing defense by continuing to stack the silver and the gold. Mainly the silver right now. I think with the gold to silver ratio being where it's at, I think silver's probably the smarter move at the moment, but I look forward to picking up some more gold as well. But I'm in no rush to do so. For the time being, I'm going to continue playing defense with silver, but I am going to prioritize playing offense over defense. And the reason I say that is because right now in the markets, we can see that there are a lot of people afraid to play offense right now. And there is this famous quote, arguably the most overrated, overused quote in existence: be greedy when others are fearful, and fearful when others are greedy. Others do not seem very greedy right now. Others seem very, very fearful right now. And if others are fearful, according to that quote, it's probably the time for me to be greedy. So I'm going to be playing offense when it seems like everyone else is a little bit too fearful to be playing offense right now. A lot of people are retracting. A lot of people are retreating right now, which means it's probably time for me to score. But of course, I will continue playing offense with an emphasis on defense as well, which is where the precious metals come into play. So I will continue to stack. I don't plan on slowing down. I don't really plan on taking my foot off the gas. I plan on continuing to stack. I believe that slow and steady wins the race. I think that steady, consistent steps in the right direction will eventually take me to where I want to go, and that's exactly how I'm going about stacking the silver and gold, primarily silver. But I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to offense versus defense, what are you prioritizing right now? Does your team have the ball? Are you trying to score, or are you trying to defend right now? Which side of the court are you on? And of course, when it comes to the latest CPI report, the latest inflation report. Please, for the love of God, don't just watch my video and that's it. Please go read it for yourself. I understand it's 37 pages long, but just skim through, just familiarize yourself with some of the numbers, some of the details. Look at it for yourself and confirm that I'm not wrong. Confirm that I'm not mistaken. You got to pay attention to these things. But I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. If you guys enjoyed today's video, please hit that like button. Subscribe if you're new. Subscribe to my second channel for weekly videos. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month, live streams multiple times a week, deal alerts every single day. You can watch all of my videos early and commercial free, and there are a ton of other perks as well. VIP Club link in the description. Worst case scenario, due to all the price increases and supply chain constraints and companies scrambling right now, we could see a big wave of advertising budgets getting slashed. And that would pretty much prevent people from being able to do what they do on YouTube, but I'll continue doing what I do in the VIP Club if my ability to make these videos on YouTube gets put to an abrupt halt. So I'll always be posting content in the VIP Club, link in the description. And then, of course, last but not least, go and get your 2 free stocks by downloading Webull and funding your account. If you refer 3 friends before midnight tonight, Webull will give you $150 worth of Amazon stock for free, with the chance of getting all the way up to $3,000 worth of Amazon stock for free. All you got to do is click that little invite button, send it to 3 people that you know, bing, bang, boom. It's quite literally that simple. Don't pass up on an opportunity. Webull link in the description. Time is running out. And I want you guys to head on down to the comments and let me know once again, what are your thoughts on the latest CPI report? What are your thoughts on inflation now being at 7.5%? They said December's report was bad. This is even worse. What are your thoughts on the little details? Used cars, new cars, gasoline, electricity, etc., etc., etc. And then, of course, when it comes to the silver and the gold, are you playing offense right now or are you playing defense? Are you doubling down on your precious metal acquisition? Are you taking a little bit of a step back so you can focus on playing offense at the moment? You going about 50-50? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.